Hello and welcome everyone to the Commodity Report for the 23rd of September 2022, presented by myself, Phil Carr, at the Gold and Silver Club. So this month we now have silver prices, they're up over 10%. Very much like platinum, also up 10%. As you know, at the beginning of the week, we took the opportunity to bank another 500 points profit on platinum as we saw a breakout all the way up to 2-month highs. This, of course, off the back of commercials. They flipped net long at the beginning of the month into both platinum and silver. This had been only the third time in 20 years that had occurred. Another trade idea we put on your radar, very much like the trade idea we discussed with you last week and this week, for buying opportunities on gold at $1,660 per ounce. In fact, from many of the comments that we received out there from you, this helped you massively to capitalize this week, as most of the market had turned bearish on gold, whereas we, as you know, have been stacking and accumulating over the course of this week and last week, as we saw gold prices break all the way down to over 2-year lows. And the playbook here, as we discussed with you, was to be long going into the FOMC statement. We saw a big short squeeze afterwards. Gold prices, exactly as we predicted, had a slingshot move higher, broke out over 1% after the FOMC statement, and instead of tanking and falling off a cliff like most of the market thought gold would, instead it broke out to the upside, broke out to $1,687 per ounce. Many of you capitalized on that. You've reached out to us over the course of this week that our analysis has helped you massively, because most of the market got it completely wrong. So well done if you managed to catch that move alongside silver, alongside platinum, which have all broken out over the course of this week. So right now we have gold. It's trading at $1,675 per ounce. It did indeed find support over this week at $1,660 per ounce, even though we saw the dollar index break out to 20-year highs, and even though treasury yields are broken above their swing highs, gold has been extremely resilient here. So has silver and so has platinum, which have continued to surge. Of course, we maintain our exposure on gold, silver, platinum and copper, and we've taken the opportunity lately to build into additional positions, especially on gold, as it has broken all the way down to 2-year lows. We've continued to stack and sniper in, which puts us in a really strong position now as we get towards the end of the week, and now as we move into the final week of September. So next week, it is the end of the quarter. So what do we see at the end of the quarter? Usually end of quarter profit taking, but often the change in cycle can occur now as we then move into the final quarter and as we move into the month of October. So we've taken advantage of stacking into many commodities here as they've broken down over the month of September to their swing lows before we've had these slingshot moves higher. Now on Friday as well, we have a speech from Jerome Powell that's going to be later in the day at 7 o'clock London time. Over the course of this week, essentially, we have seen, first of all, Sweden's central bank, they raised rates by 1%. So with that, we had Bank of England and also the Fed under pressure to also do similar. Federal Reserve followed expectations, which was to raise rates by 0.75%. Bank of England also, they raised rates by 0.5%. The Bank of Japan, they've also intervened in the currency markets on Thursday, which of course saw the US dollar break down significantly and very fast in the morning versus the Japanese yen. That also provided further support to the metals earlier on in the session on Thursday, where we saw gold break out over 200 points to the upside. You've also got geopolitical risk on at the moment as well. Of course, this week we had a major speech by Vladimir Putin, which further escalated geopolitical risk. We immediately saw gold get a safe haven bid off the back of that. Certainly, I would not want to be shorting gold going into a weekend right now where you do have massive geopolitical risk and the threat of escalation going into weekends right now. We saw immediately oil catch a bid, gold catch a bid off the back of Vladimir Putin's speech this week. So therefore, expectation is that we could move range bound to higher with the metals as we get towards the end of the month and then as we move into the beginning of October. But likewise, we are only snipering in here when we're breaking down back towards the swing lows. We're not FOMOing in. Any breakouts that we get to the upside, like we saw on platinum over the course of this week, we're taking that opportunity to scale out of more profits. We banked another 500 points this week with platinum as it broke out towards 2-month highs. Again, this comes down to utilizing data, statistics, market intelligence, understanding the daily, the weekly, the monthly, the quarterly cycles for each commodity. Further compound that with the capital flows in the market, the intermarket correlations, the ratios in the market, and of course the key areas of liquidity, and further compound that with the knowledge and understanding of how the hedge funds, the money managers, the banks, institutions and commercials are positioned in the market. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.